Hi and welcome to this video. So today I want to tell you why I advised the members last week to reduce exposure and raise cash and also sell some stocks. So this is the screen the members and I look at every week. So every Wednesday with a midweek update report, and at the weekend with a weekend report. And we have the trend in the background. So a green trend, of course, means we are able to buy signals. We look at the net highs and lows to confirm the uptrend we see in the market. We look at the stocks above the MA 200. We look at the distance of the Nasdaq from the current price to the MA 50 to see if the market is extended, and we also track the advanced decline ratio, but only if we want to look for a bottom in the stock market. So, and the main reason that I advised the members last week to raise cash and reduce exposure, and you can see that I did it here on Wednesday, July the 19th, was not that we are, or that the trend in the market changes. No, that was not the reason. The reason was much more that I saw bad price action on all stocks we have in our watch list. And on the other side, we have a very extended market, not in price, but in time. And this is something I teach the members and also teach in my video course. There are always two types of extensions in the market. It's price, which is very easy. So you track, for example, the distance from the current price to the moving average 50. So in the case of the Nasdaq, it was at 8.2% on Wednesday, which is already an extended level because everything what is above 6% is extended for us. But there is another extension level, and this is in time. And when you look at the background colors here, we are in an uptrend, in a short-term uptrend in the market since March right now. So if you ignore the 3 days pullback here, and since March or since mid of March, that means we are in an uptrend for 1, 2, 3, more than 4 months right now. So in everything what's above 4 months is really extended. So I looked back with all the members during the time or in the last couple of years, and we saw very quickly that everything what is above 3, 4, and 5 or 6 months is really extended, especially if you have an uptrend which is so steep like here. And that was one of the reasons why I started really to put the members' attention on the extension in time here. And I started to do that a little bit earlier, so not on Wednesday, but in the days before. And I had two scenarios in my mind. So the first one was, okay, we are coming into an exhaustion situation, total different story, total different thing. Or on the other side, we will see a fair breakout to the upside. I'm not perfect, definitely not. So I'm not a super market wizard or whatever, but I try to teach all the people and all the members with some basic stuff how to survive in the stock market and also make money in the stock market. And one of the most important things is to know when to raise cash and when to sell and take some profits. And if you have an extended market, which is extended in time, so up in a row for 4 months, and we have some price extension and all the stocks on your watch list, we will come to that in a minute, are showing negative price action, then it's time to make some cash and to raise some cash. And that was the reason why I wrote last week in the members chat that I started to sell position, take profits, and raise cash. So let's look quickly at the watch list. And I can show you a couple of examples what happened. So the first thing what we track in the members community is we track the leaders and the top leaders, something like ACLS, for example. You can see it's up or it has a very nice performance since January here, but it lost momentum here last week. So it lost momentum, and it shows this three higher highs in a row with deeper pullbacks. So some type of slower momentum. That was one of the reasons. Then Bellevue's, a stock I was invested in, showed this failed breakout here to the upside. Another sign that maybe it's ready for a longer consolidation here. Then other leaders like ELF, for example, showed another loss of momentum here. Then stocks like Hubs, for example, started to make no progress and had a pullback on the next day. Stocks or younger stocks like Monday, for example, showed a failed breakout here on Wednesday last week. The super leaders like Nvidia made no progress and were not able to follow through here to the upside. And that was another sign that maybe the market is ready for a pullback, because I expected that they will come into an exhaustion rally situation here. But you can see they did exactly the opposite, and we started to sell. Palantir, another stock here on Wednesday with a big reversal bar and now a deeper pullback. Hidden champions we track in the community like Powell or Prim had problems here to follow through. We saw that story stocks here like Rivian was not able to follow through here on the upside. SMCI, Supermicro, a stock which we track for months here right now, super extended, but it was not able to move higher from here and showed this wall of blue, which is a very strong price action sign. But on the other side, it was super extended, and you can see here on Wednesday it pulled back, closed down 4.6% on high volume. Symbotic, another story stock and leader, was in development of a double top, and so on. We had so many signs on the watch list, and I also got stopped out of my of a position since weeks now. So that was EVLV. Here it is. So Evolve Technologies. So I bought that here on Monday on a breakout, and I got stopped out 2 days later. So I mean, this is one of the signs that these story stocks started to not work anymore. And one another confirmation that it's maybe time to cash in and take some profits. And this is something I can always recommend, and I recommend to the members, and I teach the members and also my students in the video course to observe the market and really notice the signs when the market is changing. And the best thing you can do is have a close look at the stocks on your watch list and in your portfolio. So when they start to not fulfill your expectations anymore, and when they start to have trouble and you are tracking the right leaders in your watch list, then it's time really to take some profits off the table. Especially, and this is important, especially if the market is already extended in time and in price, because markets are never going to the moon. Everybody wants that, but this is not the reality. The reality is that market trends for a while, then have another deep pullback or another consolidation, and then trends another couple of weeks to months, and then has another pullback or consolidation. And that's normal, because the market consists of supply and demand, and sooner or later the demand is getting lower and the supply is coming into the market, and then you have a correction in the market. All right, I hope that you like this video. So if you like that, give it a thumbs up. If you want to follow me in the member community, you can do that 14 days for free. So I offer a 14 days trial and also a nice discount on the video course if you like that. You will find everything on my website, and you can also follow me, of course, on Twitter and on other social media networks.